Yo, what's going on, guys? Ladies as well. Hope you're all doing well. So today was a quick video. I think this is week 23, if I'm correct. Um, yeah, so this is going to be a weekly analysis, just a quick one of what I've marked out so far and what I'm expecting for this coming week. Again, I've already done my analysis, so I'm just going to run you guys through my analysis as well. Show you guys what I'm looking for. So let's get straight into it. So starting off with CHFGPY, we'll always start off with our daily. Let me just get rid of this box. Always starting off with our daily and want to look for an ICI. An ICI is an impulse correction and an impulse. So we look for the ICIs on a daily. Your impulse is a strong move to the upside. Well, it depends if it's a trending market going upwards, then you're looking for strong buys to the upside, or if it's a trending market going downwards, so a bearish market, then you are looking for strong sells, and then your correction will be the opposite direction. So in this case for CHF JPY, we're looking for an ICI to the downside. The only reason we're looking for an ICI to the downside, if we look at where price is currently at right now, as you can see, it's around some highs and it hasn't actually exceeded that high. I'm on a weekly right now, and you can see where we were all the way back in 2014 right now. As you can see, there is nothing to the left hand side. If I go on a monthly as well, you can see this is where prices basically started, which is 2004. It's irrelevant, but you can see it's broken highs, and it's basically on a daily, it's got to its highest point and it's retracing back down. But the way it's retracing back down, it's not retracing to create more highs. It's reached its maximum height, which is around 155.5 level, which is here, right? I've reached this level over here, and from here, it hasn't actually exceeded. Now, the only time I would start looking for buys again is if price breaks this level over here, the 155.5. Yeah, if it breaks that level, then obviously we're still looking for buys. But for now, as you can see, I've got my flip zone or your breaker block, depending on how you want to see it. Supply and demand level, they're all the same things. So I've just marked it out on the daily. If I remove the fib, actually, I've got my price alert set as well. But if I remove my fib, you can see resistance, turn to support. But because price is breaking below, and again, this is the high and it hasn't exceeded this area over here, I'm looking for sales right now. So in accordance to the strategy, again, we use the flip zones to look for where price either reverses. So we're not looking for reversals, but we're looking for flip zones. So we're looking for support turned to resistance, or resistance turned to support. So in other words, you can say it's like reversal zones, but you just got to play it by ear really. So on a daily, again, we're looking for sells, just because of that zone. Last week candle, so this candle over here is this is the first weekly candle, so the market just opened. So this is the weekly candle that's printing, but the previous weekly candle, which is here, it's a red candle, which is bearish. It does have some buying momentum because obviously it does have, it has broken those highs previously. So that's why you can see the candle's red, but it's not a full-on bearish candle. You can see it's got some sort of wick to it, as you can see, all right? So just with that alone, I'm still looking for sells. The only time I'll still look for buys is if price again breaks. Put this as a solid line. Market is 2 points. Only time I'll be looking for buys is if price breaks this level over here. What did I just do? So I use a wrong tool. If price breaks this area over here where the green line, where the green dot is, if price breaks that, then we start looking for buys, and then we will mark out a new flip zone or supply and demand area, right? But moving on, yeah. So before the market actually opened, which is this candle here, we look for our ICIs, and then from here, so from your high to your low, depending if you're buying or selling, you mark your fib out. We got 2 touches to the 38.2, and the retracement candles need to be much smaller than the actual move itself. So the impulse, so the correction needs to be smaller than the impulse. The impulse is the red candles, your correction are the green candles. And again, as long as price doesn't break above this area over here, which is the top of the fib, I'm still looking for sales regardless. So before the market actually opened, I would have put the top of my fib, because I want to measure the next correction. I would have put the top of the fib over here, right, on this candle, because it's the second candle we're looking for. Now it can create 3, 4, 5, 6 candles, as long as all of those candles are within this area over here and does not exceed the high. It's still a valid trade, right? So now that market is open, you can see price is breaking above the second candle. That's fine. Again, as long as it doesn't break above the actual impulsive move itself, right? It's still a valid trade. So what I would do from here, I would just adjust my fib. As simple as that. And then from here, obviously we look for this on the 4 hours, where we look for our break and retest of the 61.8, right? And again, I've got my price alert set, which is this line here, and you can see this little clock. I'm not sure if you guys can see it, but there's a little clock over here. So I've got my price alert set for when price breaks below this area over here. If it breaks below and closes below, then I'll get a price alert, and then I would enter. I'll set a limit, a sell limit order for the 61.8 or around this level, actually, just so it can account for the spreads, and I would enter on the retest basically. Now that I've adjusted my fib, my actual alert can come up a bit more. I would put it just about here, which is just about just on the close of this candle here. So just a few pips below the actual 61.8. I know you guys can't see it. Let me remove the box. There you go. This dotted line. So the dotted line is where I've put it, right? And that's fine. In fact, you know what? Just in case, because price actually might not even, it might close below the 61.8, but not even close below that line. I'm actually going to put it just a bit further up. Actually, do you know what? It's fine. I'm going to put it directly on the 61.8. It just makes things a bit more easier. Sometimes price actually closes on the dot of the 61.8 and the trade is still valid. So I'll just mark it as that and see what happens from there. And again, whilst the day plays out, as long as price, even if price decides to keep going up from here, if price decides to keep going up here, all right, as long as it doesn't exceed, hold on, as long as price doesn't exceed this high, it's still gonna be sales, right? If it exceeds that high, then you know we're no longer looking for sales, we're looking for buys again. And obviously I won't just buy straight away. It has to be in accordance to the strategy in itself. But that's what we're looking for this pair in itself. I'm gonna mark my zones back out, and that is CHF JPY for now. Next pair is Euro JPY. Same thing, literally basically same pair. As you can see, you've got a double top over here as well, right? So 1 and then 2. Let me mark it out for you guys. There you go. So you have a double top over here, right? But my flip zone was already this area over here. As you can see, prices come up and hit the double top, and it's creating that impulse correction, impulse move. So right now, I'm gonna look for sales regardless. As long as price does not exceed, I'm gonna put my line here, my solid line. Let me get rid of this box. As long as price doesn't exceed this area over here, right? Bearing in mind it's already created a double top. So always think about where price has recently come from. It's created a double top. So it's got bearish momentum now. So it's going to the downside. Alright, I've got my flip zone here. If I want to move this over here as well, I can do. It doesn't need to be 100% accurate, but I'll do it for this video. You've got resistance, broke above, turned to some sort of support, back to resistance, came back down, came back into the box, broke above. But remember, you already had your double top. So what happened after it broke above the box? It created that double top, and it created bearish momentum from there, right? Let me put this box back where it was. Okay, it's created bearish momentum, right? But if I get rid of the fib, again, I'm still looking for sales anyways. The last candle was red, and it's got that, it's got the bullish wick, right? Same as CHF JPY, but that was the last candle, so that's what I'm still going ahead with. And if we look on the monthly, obviously this is the new monthly candle being printed, this green candle. But if I zoom out, where's price currently right now? Price is currently at a, it doesn't need to be this big, but you can see price is currently at a resistance zone. Now you can argue and say that, yep, price is basically broken above, because you see this green candle here is basically broken above that box. But you need to remember, boxes, when you draw boxes and lines, they're not 100% accurate. They're not. You need to think of them as an area, right? Rather than something that is 100% solid or accurate, right? It's always an area, because price can easily, and again, let me zoom in. As you can see, it's literally broken above that box, right? You can say, okay, cool, it's broken above that box, and then what you're going to do, you're going to instantly buy, and then from there, what's going to happen? From here, price is going to come down, and then, you know, take you guys all out. You decided to buy, so you just got to play it by ear. It's recently coming from a strong. Sorry, let me get rid of that box. It's recently coming back from a strong resistance zone. So from there, that's my confluence. All right, on a monthly, it's touched that resistance zone. Even on a weekly, it's at the resistance zone, right? And you can see this is another resistance zone on a weekly. If you just want to mark these 4 candles here, this is a resistance zone right here. This new box that I just drew, this is another resistance zone. So you can just say, okay, you're still looking for sales right now, and I'm still looking for sales regardless, just because price hasn't actually, it's created that double top basically. As long as price does not break above this solid black line that I've just drawn over here, right, I'm still looking for sales regardless. So again, mark our fibs, right? It's already created that two retracement candles, and I know it's touched the 38.2. The new candle being printed, so we just adjust our fibs from that high that the new candles formed, rather than this one here, right? So we do it from that one there, and we go to the 4-hour again, and I'm just gonna adjust my alert so that it's more accurate. So let's put this up. Oh, I've got this magnet tool on there. Let's put this. Let me just put it on the 61.8, same as the last one. Now, another confluence as well. You always want to see structure with. You always want to see some sort of structure by the 61.8, right? This will be a structure. I'll mark this yellow so you guys can see. This will be a structure. Yeah. And on top of that, you also have another structure over here. So how you know this is going to work? If price decides to break, let's say this is from here, and price decides to come all the way down over here. It broke past that first box. I'm going to mark it down again in a second. It broke past that first box. Give me a second. Okay. Now you can see that black line, that black arrow I just drew. And let me mark this out as number 1. Let me point inside right. Okay. Put this one as a number 2 as well. Inside right. Come on. Cool. So from the top of the fib, which is here, as long as you see some sort of structure, and it's best to just draw it out like this as well. You can draw it out as 1 and 2. If you see structure, right, or some sort of structure by the 61.8, you're solid. You're golden basically. Like it's there. And on top of that, if you see another another structure just by the 88 rule, not the 88 rule, sorry. If you see another structure by the 88 fib, right, that guarantees you. It doesn't guarantee you anything because the market's not guaranteed anyways. But it's more. The rule is more solidified basically for the entry, right? Because what you want is from where your top of the fib is, you want some sort of structure being broken. So now we're looking for sales. We want to see structure going towards the downside, right? So if it creates a, in this case, we're going up. So this is the impulse, right? So if it's creating higher lows, higher lows, higher lows, So this area here, let me mark this green dot here, right, will be your next higher low. If we see the next higher low being broken, right, I can draw this line here. Let's print this. I hope you guys can see this, you know. Let me take this out. Right, if you see the next higher low being broken, oops, I didn't even know what I was doing just then. Let me do that again. If you see the next higher low being broken, right, depending on how you want to call this, whether it's a chuck, break a structure, you know, change a character, or break a structure, it's all the same thing. But because I'm not using smart money concepts, so I don't really care as to what I call it. But as long as I know that some sort of structure is being broken, right? In this case, your new higher low is being broken, then you know that's extra confluence that yep, price is ready basically. Sometimes what price will do actually from here, it would actually break that higher low, and then from here it could actually just completely turn over and go all the way up here. But it's extra confluence because if you didn't have this sort of breaker structure or change of character, however you want to call it, if you didn't have structure being broken, then and you enter the trade, then you know it's not really guaranteed. Yeah, it's not really a it's not really guaranteed. It's not a it's not a it's not a clean trade. Let's just say that, right? So that's the structure you want to see. Once you see that structure, you know you're good. So let me just go back and put my where was we? Okay, here. This is where I drew it. And actually, no, I think I drew it up here. Yeah, it was here. So I'm just gonna put this back. So that's what I'm looking for this one, right? So I'm just gonna be patient and wait for that break of the 61.8, and if it gets there, then we are good. Next pair is USD JPY. Yeah, next pair is USD NOK. So USD NLK. So for this one, same rule. You've had your impulse, which is here. This is your retracement. As you can see, our impulse was literally from starting from this red candle. We had 1, 2, 3, 4, 5, 6, 7 candles going upwards. Right. As you can see, let me do this. As you can see, we had a huge resistance zone over here, right? And price is basically broken above it, and it's giving us that huge impulse. So it's as though price is coming back, and it's another flip zone. So price is coming back to retest that box, right? And as long as price does not break below solid black line, we are good. But price has got so much gap in between this area over here where current price is now and this solid black line. It's more than likely not, unless something major happens, it's more than likely not even gonna come that far, right? But once again, 7 green candles going up, so our impulse, and then we've got 1, 2, 3, 4 candles, right? 4 red candles, which is our correction, right? And then we mark it out from the top to the bottom of the impulse, and then we are measuring the next impulse, so the ICI, impulse correction impulse. Now from here, already, as you can see, I've already got my alert set up, and then this one here, right? Remember the structure I was telling you about on Euro JPY? So basically what I want being broken is I want this area being broken. And I can even actually make this a bit smaller because of this area over here, right? Let me make it a little bit bigger here. If I see this area being broken, it's a clean one, right? Because it's the structure that is below the 61.8, right? Which is good. It's not too far away from it. And then what I want from here, so this is the bottom of the fib. This is where price is currently at now. So if price breaks above this green candle here, which is here, right? If it does that, no problem, because it might just break it a little bit, come back over here, and then do this. And if it does that, then we're perfect. Because then at that point, it would have broken above 61.8, right? I would have gotten at either where this dotted line is, which is where my alert is, or even at the 61.8, right? But But let's say even if I got in at the 61.8 and price decides to come back all the way down over here, no problem, right? Because our stop loss is all the way below the 88 level. So even if it does decide to come, I don't know, at the 88, my stop loss is actually below the 88, so we're not getting stopped out regardless. And then what's going to happen? It's going to come back up. It might give us a second retest, it might not, and then from there we're taking off, right? But once again, you want to see some sort of structure being broken, either to the upside or to the downside when you are looking for your entries. So this yellow box over here, right, is right now my resistance zone within the Fibonacci levels, right? And I want to see that structure being broken at least. If it's broken, then we are golden, right? Because then you know, okay, it's no longer a downtrend. And as you can see, because we're looking for buys, all of this is your downtrend. So this would have been your high. This is your low. This is your lower high, and then this is your low. So this is your low, and then obviously this will be your next lower high. So if this area over here, right, let me just mark it as a green. In fact, let me start again. So the green is your high over there. This is your low. This is your higher high, and then this is your low again. But then because of that green candle and that bullish candle, this will be your next lower high. As long as this next lower high is being broken, I know we are solid. We are good. If this again, if this here, this line here, let's mark it down as well. If this line here is being broken, right, we are solid. And we just need to wait for that break and retest of the 61.8, and then it's a go. Right, so that's what we're looking for that pair. Euro GBP, nothing as of yet. I'm actually still waiting for the retracement. We've got two candles, but I'm hoping that it either, because this is so much of an impulse, I'm hoping we just get solid green candles going up and at least touches the red candle, the 38.2, sorry. So I'm just looking for price to come all the way up. It might even come to the 50 level, that's fine, right? As long as it doesn't exceed where the top of the fib is, which is over here, we are good. So for this pair, I'm still waiting for it to load. But right now, as you can see, big bearish candle going to the downside. You do have a demand level over here. You do have a demand level over here, which is obviously driving the impulse. But again, we're still looking for sales anyways, just because of just because of where prices recently come from. As you can see on the monthly, huge resistance zone over here, right? And then here, if you look on the weekly, you can see I've got another flip zone over here. Prices where this yellow box I've just drawn just now, price is just broken below it, so we are actually bearish, right? Still bearish. Still looking for sales unless told otherwise. So yep, that's me for that one. I'm still waiting for that one. Next pair, GBP USD. Yep, for this pair, it's loading. This one is actually still loading. You got a flip zone over here. We're still looking for this. So this second retracement candle is still loading. So I'm gonna wait for the end of the day to see what happens. But as you can see, if you go on a weekly, you've got your flip zone over here, right? You've had resistance, some sort of resistance here, but it turned into support. It's back into the area, and it's still in a support area. The previous weekly candle was bullish, which is green candle, right? It does have let me get rid of this, I know you can't see it. It does have the wick to the upside, which is obviously selling pressure, but even on the monthly, you can clearly see price is still going up, right? It's still going up, so I'm still looking for buys unless told otherwise. That rhymes. I like that. Still looking for buys unless told otherwise. So yeah, once again, as long as, if you go back down to the daily, as long as price does not break, get rid of this yellow box, as long as price does not break this low over here, we are good. All right. And on top of that, you can see you've had bearish structure coming down over here. You've got your flip zone. And what has price done? Price has basically come up above the flip zone and broken. Well, it's given us a change of character basically for those who trade smart money concepts or even know what a chuck is or a change of character. It's given us that change of character, right? But we're simply swing trading and just looking for impulse correction impulses. So again, I'm still looking for that second retracement candle, and I'm still looking for buys unless told otherwise. So as long as price does not break this solid black line, we are still looking for buys and we are golden. Next pair, GBP NZD. For this one, as you can see, it's clear you've got your W formation, which is obviously for buys. Resistance, it's so you got resistance zone over here, selling pressure, and then it's come back in. You've got one red candle in the middle of it. It tried to come down because it's at a resistance level, but buyers took over, right? It's given us that second retracement candle, and as you can see, it's already given us that second retracement candle, right? So that's where we mark our fib. As long as price does not break this low, we are still looking for buys unless said otherwise, right? So where this solid black line is, as long as price does not break below that, we are still looking for buys. Already have had our impulse, got the correction. Go down to the 4 hour, you see, yep, it's already got that structure. As you can see, price is consolidating literally over here. So basically, let me just drop from here to here, right? From here to here. So this yellow box is our structure. As long as price breaks above it, right, it's confirmed. Right, price doesn't even need to. We don't even need to enter over here. We don't need to do no sniper entries, no nothing, because sometimes price will just do this and then boom, it just takes off. Right, but our confirmation is that it breaks above the 61.8, but then also before that it breaks above some sort of structure. Right, and I can actually draw this zone a bit bigger because it's much closer to 61.8 now. Right, so after the low, which is obviously this candle here, which is where I've marked the low of the fib, right? The high would be here. So to be honest, it depends on how you want to mark it. This would technically be a high, but then you want to mark the high of the candle, the opposite color candle before, which is this one here. So if price breaks above this high of the candle, you can mark that down, but as long as you just draw the zone and you can see price is clearly breaking above it, you are good. It doesn't need to be 100% accurate in terms of which area it's broken above. Just draw the box and call it a day. So that's that for that pair. So still waiting. If it prints another retracement candle, we're good. As long as it doesn't break below this low, we're still looking for buys unless said otherwise. Next pair, GBP CHF. This one still printing, but as you can see, you've got support turned to resistance, resistance, broken back above. So right now this is our nice support turned to resistance, back to support, and you can actually say it's like a W formation actually if you just look at it. And again, W's stand for buys and M stands for sells. And I'll just draw this over here. So when we see W's, right, this is what we're looking for. Price to basically come back. Let me get rid of this fib. When we're drawing W's, you want to see price basically come back and retest that neckline, which is here. Right, and the same for, let me invert this because I can't be bothered to draw it again. The same for, how do you invert? Oh, there you go. Yeah, the same for M's as well, as you can see. Right, M, come back to the neckline. Sometimes it doesn't even come back to the exact point of the neckline, but as long as you have an area there, then you know you're good, right? As simple as that. Yep, there we go, invert it back. So from here, again, still looking for another retracement candle, and yeah, we're still looking for buys. If we go down to the week, go up to the weekly, sorry, you can see you've had resistance, price, this bullish candle over here. So just off of this candle alone, the last week. I'm still following the last week's movement. I'm still looking for buys. Monthly candle, which is this one that just started, but the previous one, again, monthly finished off bullish, so I'm still looking for buys regardless. Even though you can look at price right now on this pair, and you can say price is literally a huge consolidation, and I can actually draw this line over here and draw a line over here as well. You can say price is consolidating, that's fine. But it just means that we are able to capture moves either to this high, or the top of the box, or the top of the solid black line, which is the top of the resistance zone, or the consolidation box, if you want to call it that as well. Or if we're looking for sells, then it just means we can target these areas over here, so the bottom of the box, and from there, you just know that that's your target. That's where you're getting out, basically. Don't even try and hold above. Don't even force the trade. But that's what we're looking for this one. Next pair, NZD/JPY. Now with this one, again, flip zone. So resistance turned to some sort of support, broke down below, again, turned back to resistance. Hasn't actually retested it, doesn't need to. But I'm just wary with this one because it hasn't actually retested this box. Doesn't need to 100%, but just because it hasn't, and sometimes it does, that's what I am wary of. And on top of that, if you check here, you actually prices have basically just come back from a demand zone, right? So prices pushing up. There's a possibility it could actually see that solid black line I just drew just now. There's a possibility it could break above that, and if it does, then we are no longer looking for sells, and we would start looking for buys as long as it matches up with everything else. This is the current weekly candle. It's very, very small. Get rid of this fib. This is the weekly candle is very small because it just printed. Market is open, but the previous candle is a bearish candle. However, it's got a hammer, and as you can see, the length of the candle, well, it's got so much buying pressure. So there's a possibility price could actually just break above this black solid line. And on a monthly, this is the new candle being formed. So the whole of last month. Monthly candle just forms almost last week basically, so 5 days now, right? And it's bullish. So just going off of that alone, there's a possibility it could actually just break. There's a possibility it could just break above that box. That solid black line. So yeah, once again, just remember where prices recently come from. And it's recently just come from the yellow demand box. So it's more than likely I probably won't even take this one. I'll see how it plays out. It actually might still work, and it might just mean that I target back to. Let me draw that fib again. Yeah, it might just mean that I target. I don't need to. Obviously, my target would be negative 27, but it doesn't mean that I would 100% get all the way down there, because that would be forcing it. Now that you've got your strong demand box over here, it's possible that price actually might just, let's say, break, retest, and it might just come back literally to this box over here and then suddenly reverse. But if I had got in anyways, I still would have been able to taken some profits, right, at literally the top of the box. Or if it decided to come back down to the 0% mark, that would have been some profits anyways, and then it would have reversed from there. By that point, I would have been at break even. But even if I had gone in, I would have taken my profits early anyways, just because of where prices recently come from. So that's just something to be wary of. So for now, I'm still gonna adjust my fib, because technically it hasn't actually given me any indication that it's 100% gonna break above. So I am just gonna do that. My fib. In fact, let me offset this. There we go. That's that. Next pair is US oil, and this moves exactly the same way as now see, this is why you gotta be careful. Okay, so basically price of recently just come back from prices just come from a demand zone, right, to give us that impulse. But if you look over here, you also still have a um, resistance zone. But if you look at this now, you can actually say price is consolidated. So, and I marked this up earlier, just before I did this video. So now that I've seen this, I'm not even going to bother doing anything else. I'm not liking this pair whatsoever. So what I'm actually going to do, I am going to get rid of this bottom box. I am going to draw a consolidation around all of it. I don't need to go all the way down to this. I can clearly see it's a consolidation box. As long as price, and I'm going to mark these out like this, as long as price, if price breaks above the box or this black line, which is the same thing, then we're looking for buys. Price breaks below this low, I'm going to start looking for sells. I could say break below this low, because technically this is actually the last structure low, but it is pretty far. So I would instantly just look for this low over here. And we have structure over here. As you can see, all right, support, turn to resistance, back to support, push up, all right, came back down here. You can say this is another level of support, but it's so damn far away, I'm not even going to bother drawing a box, and plus the box will be huge. So you just got to play it by ear, really and truly. Look, the box is huge, it's not necessary. It's like the same size as the consolidation box, so it's just not necessary. So I wouldn't even bother doing that. If price breaks below or above the consolidation box regardless, then I'm going either or. So that's it for US oil and UK oil. And you can clearly see UK oil just gapped up. There's a huge gap in that, so that's So yeah, that's inefficiency. I'm not even gonna bother trading this pair. I'm gonna take this off I'm actually gonna take this off. And you can see with UK oil and US oil, right? Basically the same pair. One of them just moves quicker than the other, and give me a second. Yeah, one of them moves quicker than the other. And you can see this is where that huge wick would have been. So that's why I just didn't even bother drawing. If I go back to the US oil, that's why I just didn't bother drawing the box to the bottom of it. It's not necessary. As long as you can picture what it is, then it is good. But yeah, this is what I would have done. So here, right? Or even with this one now, I could actually just do this. It's the same thing. It's like a few pips below, basically. I just want to see one candle, and I don't want to see one. I don't want to see a small skimpy candle. I want to see a big candle. So let's say from here, I don't want to see one skimpy candle like this. Right? So where the point of, I don't want to see a skimpy candle like this. Like, let's just say the end point of this arrow is where the candle closed, right? I can't bother to draw the box either. But let's just say with the end point of this this arrow, let's just say that's where the price closes. All right, I don't want to see that. I want to see candle close way below, right? That's what I want to see. And once I see that, then we're good, right? That's why it doesn't even matter whether I put this line, this solid black line here or there. I just need to see price close below with some sort of momentum. It's all about momentum. But yeah, all in all, those are the pairs I'm looking for right now. And yeah, at the end of it, obviously there's going to be a weekly result as per usual. But yeah, stay tuned. Thanks for watching. Don't forget to like, subscribe, comment, and all of that jazz. Peace.